This is the TradeSite U.S. Stocks and Futures Market Preview for the week beginning Sunday, the 4th of February. We're in February already. Ending Friday the 9th. By the way, options expiration is the following weekend on the 16th, which is also a 3-day weekend for the President's Day holiday on the 19th. So that should be a bust, but it's early in the month for that. But it is what it is. Let's see how this week goes first. Here's the dollar index daily chart. We're dead in the middle of the range for the last year or so. And, not much happened in the last 2 weeks. We did spike up. We had a pretty big candle on Friday, but other than that, we're still right where we've been. Here's the euro dollar, the inverse typically of the dollar index. Again, we had that 13 sell signal back at the end of December, and we've been down ever since. Haven't quite gotten to the red target, the static trend line at 1.0715, but we'll see if we get there. The pound dollar has been just completely dead, but I will say because of the action on Thursday, we did get a 13 sell signal. I don't know how much I love this one because the 1 through 13 is pretty flat, but we are up from where the 9 March startup phase was. So, it could be that we head back to that 1.2275 number, and that would mean strength in the dollar. So all signs point more towards strength in the dollar. Here's the ES front month futures contract, daily chart of the broad market in futures form. All-time highs. Again, market continues to be strong. We had a great unemployment number and new job number on Friday. I mean, everything's just pumping up all cylinders, no matter what anybody tries to tell you. This economy is strong as heck and continues to be, and probably will continue to go that way for a bit. And if they start lowering interest rates in June, that probably will only help. They're going to need to do that to offset some of the problems that would occur if they don't. So that's probably going to happen, and the market's already looking at June. But of course, when you look at a strong jobs market, you got to question whether or not, when they're going to start lowering rates, why they need to. Inflation's your issue, and right now, inflation's kind of subsiding as well. So, strong market, strong economy, everything you could ever want. Here's the S&P cash, obviously new highs here. Again, NASDAQ 100 closing at all-time highs, even though we had a 13 sell signal just over a week ago. That caused a pause for a couple of days. We're still under the risk line of that. That'll be the only thing I'm going to be interested in. That's just under 18,000. We get to that number and can't break it. That might be interesting. But other than that, what's holding us back at this point? Russell 2000, not at all-time highs. That's the newer small cap stocks, obviously. But they're a little more affected by interest rate moves and whatnot. Usually this is a good time of year for that, but it is what it is. Here's Bitcoin. Hasn't done anything for a while. It'll be a 13 sell signal if it ticks up for a day, just like that pound dollar was. That'll be a useless signal because it's barely up from the 1 through 9. It's also barely up from the start of the seeker count. Having said that, to get the true signal, we need to be above the 8, and that was the high candle of this whole thing. So, we got to get up near 48,000 for this to really throw the true sell signal on Bitcoin on the daily chart, but we haven't had one in quite a while. The last one, by the way, you can see on the far left side of the chart was near the high there back in June of last year. TLT, the 20-year bond ETF, had curled up this week, dropped on Friday because of the strong jobs number, but overall was up for the week. So bonds up, rates down, as they say. So that jobs number is the only thing that's concerning everybody because the economy, like I said, is very much on fire, and that makes you question whether or not the Fed's going to lower interest rates as soon as they say they will. The VIX closes at 13.95. Still a bad number, not good for volatility. Would like to see that number rise and get back to some action in the markets. The advanced decline ratio was all over the board this week. Notice, by the way, that Rich pointed this out in the lab, if you take out the top 8 or so NASDAQ stocks, the NASDAQ 100 market breadth is not very good. It's only the top 7 or 8 or so, the big ones like Meta and Microsoft and Google and Apple that have run the NASDAQ up. Everything else is not doing that great. So it's an interesting dichotomy, but it is what it is. The trend closes at 0.85, and then that puts us the 10-day moving average at 1.21, which is not a sell signal. So we're good there. Oops, my bad. Sorry. We've got the ES front month futures contract, the intra-week action. That's what you can see there. So Monday flat opening, rallied a little bit late in the day. Tuesday as dead flat as it can be. I mean, that was just horrible. Then Wednesday gapped down. We had the Fed announcement, wiggled a bit, and then sold off. Thursday gapped up, almost filled the gap, and then rallied. Friday rallied hard, end up closing positive for the week. NASDAQ 100, not as positive, barely above where it started the week, but still did close positive for the week. Let's go through some of the major stocks we like to follow. Apple on the daily chart had pulled back and but bounced pretty hard on Friday. Amazon gaps up on earnings to all-time highs there. Meta gaps up on earnings to all-time highs. Google gapped down, though a lot of people question whether that makes any sense based on their numbers. Everybody's trying to point out the AI stocks got hurt. I don't know if that's really what is going on there or not, but it is what it is. Goldman Sachs still dead flat. This thing's been flat for quite a while. Netflix holding near highs. Tesla, pretty boring week overall. Nvidia runs again. There's a sell signal on the weekly chart of Nvidia, so be aware of that. Zoom, not much here. It's pulled back a bit. They did some layoffs as well. And First Solar, not going anywhere either. So, that's kind of the big stocks that we like to follow. I wouldn't say there's any major patterns or many major signals on them, but it is what it is. In terms of economic data for the week ahead in the markets, and we'll just focus as usual on the U.S. data. What we have is on Monday, some services PMI numbers around the globe, and then here in the U.S., final services PMI at 945, ISM services PMI at 10. We've got, and that's it. We've got the rate announcement out of Australia going into Tuesday. We've got the tip economic optimism number Tuesday morning at some point here in the U.S. Unemployment rate out of New Zealand. That's not going to change the world. Trade balance here in the U.S. That's one of our big ones for the Forex market, and so that might affect the currencies. That's at 8:30 a.m. on Wednesday. Crude oil inventories at 10:30 on Wednesday. Got some Fed members speaking. 10-year bond auction at 1 p.m. Eastern time on Wednesday. Consumer credit at 3. On Thursday, we've got, and I'll be off on Thursday, by the way, but on Thursday, we've got the weekly initial and continuing jobless claims numbers. Mortgage, that's an hour before the bell. Natty gas at 10:30. 30-year bond auction at 1. And Friday, no data at all. And like I said, the week after leads into a 3-day weekend and also has the options expiration for February. We have a lot of earnings coming out. We're in core earnings season, so we'll see what that leads to. Hopefully that's what wiggles the market and gets things going and gets that VIX up so we can start seeing some more volatility and things get more interesting. Charts as usual brought to you by NinjaTrader. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.